Micah, welcome to episode 11 of COVID Conversations. It's great to have you here from across the border. You are our first international guest.
Thank you for having me.
It's been a while, and it seems like things are going well up in the Toronto area. And you're in downtown Toronto, and I'd love to share with our audience how things have been. How is the real estate market? And we're now in June, in the middle of June, and I'm sure things have been very different between February and March, and the early spring market to where it is today. Can you give us a little bit of, I guess, a little background on who you are first, and then where we are in the market?
Sure. So great to be here. I have been in Toronto now 10 years, native to Ottawa, so Canada's capital. Been in real estate the last 6 years, and I work really central Toronto. So in the core, sort of spreading all segments between houses, condos, rentals, commercial properties. But really the breadth of my experience is like in central Toronto. So that'll be sort of what I'm speaking to today. It's been an interesting 6 months, beginning of 2020. We started off with almost no inventory at the beginning of the year for all segments, really. And in the last couple of months, really from March 15th, which was our sort of COVID beginning date here, there really has not been a ton of inventory at all. So we'll start there. There has been a little bit more starting to move now, but the traditional spring market that we would see, in April, May ramping up really was paused. So I'll just give you guys some sort of high level stats about like Canada's housing market where we are now. So home sales right now are down almost 40% year over year from 2019 to 2020. And the average prices are sort of down almost 3%, 2.6%. Toronto paints a little bit of a different picture than the rest of the country. Besides Vancouver, these two cities really have continued to move, but are slower. We have seen the housing segment really continue to move forward and sell pretty much at asking. So we have seen a actual 6% increase year over year from 2019 to 2020 in like the semi-detached market. So actually like a pretty substantial movement. Detached houses have gone up about 3%, and condos have been hardest hit, even though we still haven't increased, just at about 1%, just 0.75. So really my business, as I mentioned, is sort of in the core. If we talk about houses, we can start there. Really, when we have started to see a little bit more confidence in people going out to look at properties, a lot of homes are selling around their asking. In Toronto specifically, there was really sort of two selling strategies, either pricing your property at its value, or for most properties, pricing it low and then holding back offers and then seeing what happens within a week. That for the housing segment has maintained. We're still seeing multiple offers on properties. COVID hasn't had a drastic impact in terms of the pricing because our inventory is so low. We are only now at the beginning of June or the middle of June starting to see what we would have seen in April come out. Really from November 2019 until I would say June 1, almost nothing. If I was to talk about the downtown core, we had, for 3 months, 70 properties, between $700,000 and $2 million. So, the entry level for a lot of Toronto home buyers, which is really nothing. So that's sort of what's been happening for houses. Condos are a whole other story. We had a ban on short-term rentals, so Airbnbs weren't allowed, and there was an influx of units under $500,000 that sort of came onto the market, a 14% increase in what we would have seen last year. And because of that, we really saw prices come down with the amount of inventory that's there.
Prices on the lower end condos, and I say lower end, they're still expensive for many people, but like under 700,000, you saw an influx of supply in that space.
Yes. So for the first time, I would say in 2 years, you have an opportunity as if you were a first-time condo buyer looking to enter the market under $500,000, there's actually opportunities. Where I would say for the last 24 months, you really, the entry point for a lot of people to be downtown, and just so everyone knows, you know, when I talk about entry point in Toronto, we're really talking about a one-bedroom condo, probably 500 square feet with no parking. And that was really selling at about $1,000 a foot. And that's, you know, been progressively moving up over the last couple of years. Pre-construction, which is a massive like industry here in terms of the segment, has seen a bit of a decrease in terms of the price. We were sort of itching upwards of $1,300 a foot for some buildings in the core, which is incredibly expensive when you're talking about your investment not being ready for 2 to 5 years. So that supply has sort of increased, and prices have decreased. People who are looking to purchase condos in the city are a little bit less likely to physically go into the property. So that's something we can get into too, is what we've done as real estate agents in Toronto to try to do virtual marketing in order to limit the amount of exposure either sellers or buyers have for actually viewing properties. So there's really been a huge uptick of virtual 3D modeling, virtual open houses, because we did have a ban on physical open houses, and that still exists as we're in a state of emergency. So we, you know, limited the showings, a lot of health disclosures for anyone to even like go view a property. And because some buildings aren't allowing visitors, it's a challenge for some owners to sell or move their properties.
Or did you find, so a lot of what you're saying is similar to what I'm personally experiencing here in the Boston market as well. And you mentioned earlier that you had an increase in supply for the entry level one bedroom condos downtown around the 500,000-ish mark. And I think it's clear that, you know, the pandemic really, it disproportionately affected service industry individuals who perhaps typically make less money than in other industries, and may be considered more expendable rather, which is unfortunate. So how has this affected the higher end of the market? Has it stayed strong? Are the units sitting longer? Are you seeing a lot here in the US? We have forbearance, where it's the opportunity for borrowers to basically stop paying their mortgage for up to 6 months. And there's an arrangement with details that are still to be determined on where those 6 months of payments will be made up at a later date, whether it's at the end of the 6 month period that's added to the end of the mortgage, it's amortized over the next 6 months. It's unclear right now on how those missed mortgage payments will be made up. So how are you seeing something similar on, you know, do you have forbearance in the Canadian market as well?
We do, where we have a mortgage deferrals. So that's sort of what the federal government announced at the beginning of COVID. So very similar, 6 months of deferrals. You still need to pay your interest and all your missed payments. It's being worked out, similar to what you mentioned in terms of how those repayments are happening. And that has also been a reason why we haven't necessarily seen a massive impact, I would say, from COVID in terms of the market. On the higher end of condo purchases, and we could focus there for a minute, properties are sitting longer, period. Let's call it from the $1 million to $2 million mark. They would have moved most likely in 2019 within a week or 2 weeks, because there was so much demand and our interest rates are still quite low. So for people purchasing, you know, that's one thing that's been quite interesting. If you were approved and have a pre-approval that rolls in for another 3 or 6 months, you know, under 3%, which for us, you know, here is an incredible rate, you know, and has been for the last 6 months. A lot of those people who are looking to purchase are still purchasing. So, you know, if we probably won't see a drastic impact, I think, until 2021 in terms of what type of correction we'll see. And it will really depend on what segment of the market we're talking about.
So it's interesting that you're making the prediction for 2021, because if it's a 6 month time period where you're allowed to defer your payments and make them up somehow in the future, most of those mortgage payment deferrals, I think, started in the end of March, April, beginning of May time period. So when you add the 6 months onto it, you're entering the fall and winter market of the later half of 2020.
Yep.
And if you're forced to start paying any sort of payments during that time period, with any sort of forecasting by these borrowers, you would think that they might be trying to bring their properties in mass to the market, in the fall market. And I'm interested to see how that plays out here in the US, or if that 6-month forbearance period gets extended, or how that works, because I think that there's going to be a lot of properties that, should borrowers need to start paying again at that time, they're going to consider, well, hey, we got to start paying our mortgage again in 30 days. Maybe we should consider selling. And it's not normally an ideal time to sell your property. So it'll be interesting to see how that plays out.
Agreed. And I think for us, the reason I say 2021 is when you talk to, different experts about projections. Right now, people are still receiving the Canada Emergency Response Benefit. So depending if you've been laid off, that's $2,000 a month. We don't know what's going to happen after those 6 months. Like what will happen with deferrals? Are a lot of people who are also investors that own their properties, are their tenants paying rent? Are they still able? So it will be an interesting time. I don't think we know yet. There is still a lot of demand. That's the one thing I will say in Toronto. For my clients specifically who have been looking to purchase, I actually had a really busy couple of months because they were able to capitalize on people maybe being a little bit more reluctant to go and view properties, meaning that they were able to purchase quickly. And for some of those, they had it was mostly in the housing sector, not necessarily in the condo market. And so again, those segments I think are very distinct and different when we talk about them, because condos are sitting and people are waiting to see if there is a decrease or a further decrease. Houses, on the other hand, in the city proper, it's still very competitive. If you want to purchase a property under $1 million right now, 3 months ago, you would have been competing with probably 15 people. Right now, that competition has dwindled a little bit. You might be competing with 2 or 3 other individuals, but there's still competition. So you still have to be prepared to move quickly. People are still purchasing with conditions fulfilled. So either a home inspection that's been reviewed, their financing's already in order. It's still unlikely that you're going to have a deal move forward for a home that is conditional, depending on, again, like what part of the city. But if we're speaking about central Toronto, by far, I've had a lot of clients who are looking to purchase and might not be, they've been living out of town because of COVID, and all the properties they've been interested in have sold within a few days. So people still need to be a little bit aggressive when it comes to their search, and not necessarily hope that in central Toronto that they're suddenly going to get an incredible deal. We don't know what will happen in 6 months, what will happen in a year in terms of the market. But if you're able to purchase a property within your budget and it meets your criteria, and you're not necessarily looking to flip your house, you probably are moving on it. And that's what I've been seeing personally with my clients.
The wildest story that I've personally experienced just last week was with a client I've been working with. We found a property, $2.1-ish million it was listed at, multiple offers. We came in hundreds of thousands of dollars over, wild amount over. The buyer was excited for the property. They wanted to spend that much. I said, okay, we can. And they still lost. Mm-hmm. They still lost. Someone beat them by over $100,000 in all cash. And it was wild. The market, and it's interesting because there's still supply and there's still demand. And you're having the same experiences we've had in previous seasonal markets, where you're just having multiple offers and people outbidding each other. It's just, I think both the supply and the demand are lowered a little bit. Mm-hmm. So there's less opportunities, but there's still a proportional amount of demand that is creating the same environment. Yeah. And it will be interesting to see how it plays out if some of the demand drops out of the race for a bit, and if more supply comes on, how that'll affect the entire market.
And for us, our housing stock in Toronto is old in the center of the city. So a lot of the options for people from, let's call it under $1 million to $3 million, it's, you only have so many opportunities for properties that actually have good value. And, as an end unit, like as an end user investor, people want to live in. So that's also been a massive impact. There is inventory, but how much inventory is it that people really want to move on? And you'll see the properties that potentially don't have parking, or all of the like small little things that people might have been willing to negotiate on 6 months ago, are less willing to do so now. And it just shows buyers like what they need to be careful about buying down the road in terms of whatever their investment is. So it's a bit of an unknown time, but things are still moving forward, in all segments. Rentals, that's one thing for a lot of investors who own. You have to be careful thinking that you're going to necessarily collect the same rent that you have been in the last year. A lot of my clients who own and then rent have probably lowered their price if their units are vacant in order to move them. So that's been a change versus, Toronto, where we had a very aggressive rental market. Same with that sort of first-time condo buyer. The ultra luxury market, if you're talking, over $5 million, there's a decent amount of inventory. Properties are probably sitting a little bit longer because that segment isn't moving as quickly. You aren't necessarily having as much foreign investment this second. But again, I think a lot of people are, if they're able to wait to see what happens after these deferral periods or within the next 8 to 12 months, they probably are doing so, unless an awesome opportunity comes up, or you've been searching for a property, or you have to sell. And I've had clients that also had that situation, who purchased at the very beginning of COVID, or sort of pre-COVID in North America, and then we had to move their properties. And when it comes to listing those properties, again, it was important for us to have like very honest discussions about like where the market is in terms of value and what the strategy would be to move that, instead of just pricing it low and expecting, an unknown value, like you sort of mentioned for your clients when it was, $100,000 over asking.
So the rental market, we didn't talk much about, but it's a very interesting space here in Boston, in that the Boston market is powered mostly by students and recent graduates. And now that schools are largely closed, there has been not much demand for the like June, July, August, September start dates, which is most of the city here is on like a September 1, between June 1 and September 1 turnover dates, because it coincides with school schedules. And now that students aren't here, instructors don't have to move here, everything is virtual. When students graduate, they get a job, they don't have to move into the city to be close to their job right now. The rental market, from my perspective, has weakened significantly. We have the big corporate companies that own 200 unit buildings, and they're offering 1-2 months free rent without having to lower their rents. So in the hopes that a year from now, when it renews, they get to keep their price point. Individual landlords that I work with are having trouble renting their units as well at the same price point, even units that have exclusive outdoor space, which you would think would be a bit of a premium for the market currently, so people can go outside, having trouble renting them at the same or even close to what they were previously rented at. So how has the rental market changed similarly in the Toronto area?
Same. I mean, the demographics are a little bit different because it isn't student run as much as it is, a mix of professionals, new immigrants, all sorts of aspects. But the rental market has weakened. There's just a lot of inventory. There's way more inventory than there would have been a year ago because short-term rentals aren't allowed, or now they are allowed, but at the beginning of COVID they weren't, and so people who were trying to Airbnb their condos couldn't. And I think people are going to be a little bit more hesitant to Airbnb in general. So right now, there's a lot of supply. I mean, there's demand, but people can be much pickier than you could have been before. Landlords are being a little bit more careful in terms of who they're actually selecting for their units too, because they want to make sure that, they do have to raise the rent, or, they have any issues that can be dealt with appropriately. But in terms of price, that's been one of the most noticeable factors, I would say.
Yeah, well, it'll be interesting to see how the rental market changes, especially as it relates to short-term rentals, because people who invested in properties with the expectation that they're going to earn 20 to 30% more in revenue per month from an Airbnb or another short-term company, they're not getting that. So it will be interesting to see if you see an uptick in the Airbnb style units coming to market for sale because the investors decide that it's no longer viable for them.
Exactly. And right now we have a little bit. We've seen, that lower segment, become a little bit more frequent in terms of the availability, which is why for buyers that have been looking and outbid, if their employment hasn't changed, then it's a great opportunity for them to actually maneuver in. And that's one thing that I'm finding with a lot of my clients who are either first-time buyers or investors. If there's an opportunity to purchase something because they understand that either their individual or family, circumstance isn't going to be drastically different because of COVID, and they're just in an industry that maybe hasn't been hit as hard. Well, for them, it's a good opportunity because they can lock in at a low rate and get a good unit for a low price.
So before we wrap up the conversation, and first off, I've enjoyed this conversation. It's been very insightful and I appreciate it. So thank you. I like to ask each guest that we have a conversation with, if they have any best practices or tips that they can share with our audience, which is predominantly real estate professionals, licensees, brokers, developers, and just corporate, entities that manage, could be property managers, et cetera.
I mean, for me, I think just having, an open dialogue with your clients about what they're looking for, and not necessarily, for me at least, pushing them to act or, not to take action right now, and to see sort of what their really true needs are and sort of pivot from there. There are people who are going to obviously get very antsy about either having to sell or trying to buy. And for me, I think one of my best practices, and a reason why my business has continued to grow, is because I'm able to sort of sit there and really just listen to what people want to do, and then sort of understand that and take the time, because right now people are unsure. And I think just allowing people to be a little bit more confident that you yourself are looking after their best interests, and advising them on all of the policy changes that are also happening, because for each client, obviously different initiatives help or hurt them. And I think there's so much information, whether it's for you guys in the States or for us in Canada, or for international buyers, if you had, agents that are working in Toronto, understanding, where the market is and what can help or hurt each client, for me, I think has been really beneficial in just keeping everyone sort of at ease about, where things are, and just keeping their best interests at heart.
Yep. As the owner of a real estate school, I can tell you that education is sometimes the best way to engage clients, to let them know that you know what you're talking about, and then educating them on what they need to know so they can make better informed decisions. Exactly. So Micah, thank you for your time. This has been very insightful. I learned a lot and I enjoyed the conversation.
Thanks for having me.